Hello and welcome to Fintech Focus TV with me, Toby, and I am delighted to be joined today by Alan Meaney, CEO of Fundrex. Alan, how are you?
Doing good, Toby. It's been a long year so far.
It has gone on forever, hasn't it?
All 36 months of it, and thankfully things have settled down on our end. But yeah, I mean, we're starting to see some green shoots of hope, I think, across the world, especially for you in London and ourselves here in Ireland. People
Yeah,
are starting to get back to normal. So hopefully we don't see that second wave that people are worried about.
Yeah, I think there's been some, we're talking today where the Bank of England have just released some figures, and whilst there's some fairly gory stuff out there with if you read it one way, the other side looks at a very positive bounce in 2021, and as we were talking about before, we're seeing some nicely reclining figures in terms of the human toll of this whole thing. Yeah. So as you say, green shoots are out there. Alan, I've been hearing more and more about your business of late, and I think it's a really fascinating thing that you've been doing since launching. But for those who haven't heard of you a little bit so far, can you give us a brief introduction to yourself and Fundrex?
Sure, Toby. Yes, my name's Alan Meaney. I'm the CEO and one of the 3 co-founders of Fundrex. Fundrex develops data transformation and reconciliation software for the funds industry. So that involves fund administrators, fund managers, and audit firms using our software to automate the workflow around ingesting data and also reconciling it, typically across trades, cash positions. And what we've done over the last number of years is build a cloud-based SaaS platform with consumer UI and UX to tackle the kind of legacy issues that a lot of our clients would be seeing. So my own background is as a recovering fund accountant. So I spent 10 years working in funds, always on the semi-technical side. I studied computer programming in college. And basically what we've tried to do is bring the 2 worlds together of software development and the funds industry and create a platform to help people manage all the processes through the UI without any technical knowledge. So effectively give them the tools to manage and automate their daily tasks in a world where there is no data standardization, which is really the biggest challenge a lot of our clients deal with.
Yeah, I think it's a fascinating problem that you're solving, and it seems to have gone really well for you with multiple awards and the sort of expansion of the company. Look, you're a Dublin-based business, and took it out last year to New York, and you physically moved your family over to New York City, and in the summer of last year. I think it's really interesting that you took the decision to move it back, and I'm really interested to hear a little bit about the sort of decision behind that. Obviously, Dublin and Ireland has been very strict in its policing of COVID and the government intervention and what's happened over there. Probably a little less so over in New York. Tell us a little bit about how that's impacted the New York business with you sort of relocating back over here, your plans to get back over, and what it all means for the long-term structure of Fundrex, both in
Sure.
Europe and the UK.
Sure, Toby. So US is obviously a huge market for us. It's where probably about 45% of the world's hedge funds are based in New York. So a massive magnet for all the service providers as well. So for us, like any enterprise software, it's very important to have a physical presence in your own market. A lot of our deals are done or have been done traditionally face to face. A lot of those relationships have been built on the back of coffees, conferences, meeting people in person. So for us to expand there, we felt it was important to have people on the ground. For us as a relatively small scale-up fintech, so we're a team of 17 people, we felt it would work best with one of the co-founders there to help share the vision of what we're working on. Hire a core team to build out in the US. I took the bullet for the team and volunteered to go to New York City. So we've been living in Manhattan, working out of Bank of Ireland, one of our bank's offices there beside where we're living. It's been a fantastic experience. We've just recently hired our chief revenue officer out of Boston, which was part of the factor of making that relationship happen, was being in the US in the first place. Coming back to Ireland was really a family decision based on what's best for the family in the short term. As you know, all the offices have closed in New York. Anyone that has had the option, from what I can see, has moved out of New York. So if people have had to return to parents' houses, if they've had to go to a second house, if they've had to return to their home country, most people that have had the option have left. The city itself, when we left in March, was very, very quiet. It was almost like a bank holiday Monday every day of the week.
Yeah.
You know, very eerie when you're in such a built-up area with traditionally had
definitely. I've seen the
such
pictures.
a bustling atmosphere and such busy traffic, and you know, you'd almost miss the sound of the horns from the cars. So it was quite almost it was quite unsettling atmosphere. Because offices are closed, there was, you know, and you know, a lot of our sales side of our business is driven by in-person meetings, although that's obviously evolving now. You know, there was no real anchor to keep us there, given the health concerns. So, you know, as a kind of, what's the, you know, path of least regrets, we decided to move back to Ireland short term till things settle back down. Of course, still paying a lease payment in New York City, which is expensive, but keen to get back and use that as soon as possible. But yeah, the plan is once everything settles down, we'll get back over there with the family and, you know, get back stuck into things once the offices open back up.
Well, it's a country of great opportunities, isn't it? And I think you know, whilst massively hit, there's you know, there's certain to be a bounce over there. So it's exciting stuff to you know, to look forward to.
Yeah.
Look, it's interesting you talked there about what's best for the family, and I think that's been a sort of you know, core of your team and business from what I see and understand of it. You've spoken before about really making sure you look after the team and the welfare of the team, the well-being of the team, and such like. This has been a sort of very intense period for a lot of people with all sorts of different challenges, from people who are, you know, living alone through to people who are living, you know, living in families and trying to get by and all this sort of stuff. There's a lot of pressure. There's a lot of, you know, talk at the moment about mental health and such like.
Yeah.
Tell us a little bit about how you've looked after your team and what that's meant for you.
Sure. So I guess what really got me thinking about this was a post I seen from Joel Gascoigne, who's the CEO of a social media scheduling company called Buffer. I don't know if you've come across them, Toby, but they have you schedule out your social media posts. And Joel runs it as a fairly transparent company. They share all their revenue figures. Well worth checking out their story and their background. Joel had mentioned recently that they were moving the company to a 4-day work week, specifically to avoid the issue of burnout during COVID. So what he'd found, and I guess what resonated with me when I read it, was people are, you know, working quite intensely and not taking any time off, because, you know, there's no real option to do anything in your time off. And, you know, when this first started a few months ago, everyone assumed, well, you know, for the next couple of months, you know, while this is going on, we won't take any time off. And then later in the year, I'll be able to go on a big holiday. Turns out that that's not going to be the case, and that more than likely a lot of firms, especially ones that can successfully work remotely, aren't going to return to the office in 2020. You know, interestingly, Jack Dorsey from Twitter tweeted yesterday that they were giving employees the option to never come back to the office. So they basically said, if you're working from home now, you can stay working from home forever. Was the press release, which is really a fascinating turnaround in companies' approaches to remote working. And what we felt, I guess, reading with Joel a few weeks ago and considering, you know, what's going to happen in the next few months and the external pressures that people are under from COVID. Like, you know, we've one of our employees has twins that are, you know, toddler age, and, you know, they've no daycare, they've no creche, they've no grandparents to help. Both adults are working. So what they're doing is basically a rotating shift of minding the toddlers while the other one gets a few hours work done. And as you can imagine, that's fine for a week or two, but over a sustained period of a few months, you're inevitably going to run into burnout.
Yeah.
And that's one of the major risks we see with working during COVID for companies like us that are, you know, have been lucky enough that the business itself hasn't been negatively impacted to a huge extent. But at the same time, you're trying to figure out, well, what's the best way to manage the team through this period. And I think mental health is an issue that everyone is going to see outside of fintech as a huge concern for the next 12 months. And we're just trying to be a bit proactive on our side. And we've had a chat with the team. We've said, listen, try and take long weekends here and there. Try and book some time in before the end of June. If you can take a week off, please take a week off, and even if it's just to switch off, because we're constantly on. And what I find, my days are just fading from work into home without really any downtime in between. You know, you're working through dinner and lunch, and all of a sudden it's 7 o'clock and you haven't sat down for a cup of tea to relax. So, you know, if I'm like that, I'm sure the rest of the team are experiencing the same thing. We're just conscious that, you know, that can't go on over a medium term period.
Yeah. Okay. So it's that sort of thought process of thinking ahead and making sure that you're there and you're talking to your team and you're assessing it and constantly communicating and giving them the option to to take that time and utilize it well.
Yeah, I think what the rhythm that we've got into now is weekly one-to-ones and trying to do a weekly all hands call, just to keep our finger on the pulse of how people are feeling, and how people are coping. And then if needs, we'll add in support, be it practical things like, getting in a new desk, getting in, upgraded Wi-Fi, getting in a dual screen, or a more comfortable chair. All small things, but could be having a negative impact on people. And then stuff like if people need time off, moving the resources of the team around so they can take that time off. If people feel like they're under pressure with too many projects at one time, is trying to redistribute those so they can get themselves rested.
And how's the camaraderie of the team been going?
It's been good. So we've had a couple of Friday happy hours. We've had a quiz there recently, which tends to get fairly competitive, which is a lot of fun. But it's the social aspect of it is tough to replicate remotely.
Yeah.
I mean, I think when you're on video calls all day, it gets to Friday, sometimes it's not that exciting to go on another video call and just have a beer in your hand. People still have a desire to socialize in real life. We haven't managed to fully replace that, but we're trying to put a stopgap until hopefully people get a chance to get back out and about.
Absolutely. And there's another interesting part of the sort of team is that it's a team that's been growing and onboarding as well, which is which is good to hear, because I think there's a much missed aspect of this, that people are able to do this, and to bring people into their teams, to onboard them remotely, and there's a whole wave of people who've done this in a completely innovative and new way, to interview, to onboard, and to get people up and running in their teams, never having met them, which is a real first for the industry, as far as I can see it. Tell us a little bit about how you've managed that, and what some of the sort of real key lessons that you've seen are so far.
Sure. So we had 3 new hires start in the last 4 weeks. All 3 we had committed to pre-COVID. So they obviously, in the funds industry, tends to be quite a long notice period. So they had varying notice from 4 to 8 weeks to give. So we had, decided to hire them. They had actually started working remotely in most cases with their existing company during COVID, ahead of finishing up. And then coming on board with us, obviously it's a fully remote start. So the practicalities of having to, get a PC to them, or laptop, should I say, getting all their IT equipment out to them, and then, a morning of onboarding them on to all the systems remotely, and then getting them up to speed. So it's been interesting for them, I think, especially because, it's weird starting at a new company for anyone at any time. It's especially weird to be starting fully remotely when your only point of contact is via screen or phone. And, they seem to be doing quite well, have got productive very fast. We're going to have to get some of their feedback in the next few weeks to see how we've done as a company to successfully onboard them from their point of view. And get that feedback and try and improve, because no doubt we've made some mistakes along the way, and we could have possibly done things better. So really keen to get their feedback on how they felt things went, and how they might, advise us to do better next time. We haven't gone through the fully interview remotely, screen remotely, and fully onboard remotely. That's really the next milestone for us to hit. So that's going to be an interesting experience as well. But I'll be doing some reading up on that beforehand to see how people are coping, and then it's really trying to come up with a medium-term plan to share with people of when do we expect to get back to a physical office? Are we planning to go back to a physical office? What would people feel like if we said we're going to give the option to work remotely from home? Would that be something they'd be interested in? So there's tons of stuff to explore. It's a very fluid time. We don't know what our options are going to be. And then based on those set of options as they evolve, we'll just have to make the best decision for the team and for the company.
So what are your thoughts on that? Do you see yourselves going back into an office environment? Do you see yourselves having a bit more of a flexibility around both aspects of it all? What does the future look like?
I think definitely for a lot of founders and CEOs who might have been semi-reluctant, and I would have thought, this time last year, if you asked me that our development team could be fully remote, I would have said, they need to be in an office sharing ideas and collaborating and asking questions. When realistically, we haven't seen a drop off in productivity at all since we've gone fully remote. So I think it's shocked a lot of people in, woken them up to the possibilities, and maybe removed a few misconceptions that might have been there around remote working beforehand. I think people are going to be, really hungry for social contact when all this finally finishes. So I think an option to get into an office, even from a social aspect, what I've always found good about having the flexibility to work from home, running our own businesses, if I want to do 1 or 2 days from home, I can. So, if I have a few things to get delivered, if I have stuff to get done around the house, a few errands to run, I can pick a Friday, a Monday or Tuesday and do it from home. But then I also like the aspect of getting out of the house and trying to separate home life and work life physically, because it's obviously impossible at the moment to physically separate it other than a room, or some people are lucky enough to have a garden shed. So, I think the option to do either and regulate yourself is what people really want. So, if I can go back into the office for 2 days a week, get out of the house for a while, meet some people, and then pick and choose the days that I work from home. But I think now that we've realized, given the tools that we have available to us, and people's adjustment to the culture, people can do that chop and change pretty quickly. We would have, I guess in Ireland, we had our first shock a couple of years ago when we had the bad snowstorm and everyone had to scramble in the fund service providers, who traditionally would be in office only. Some of them might have had, Citrix setups where 1 or 2 people could work remote. But all of a sudden, everyone had to work remote because it wasn't physically possible to get into the office. So that always felt like a good training session for what we've entered with COVID. And now with COVID, those same companies have seen, it's business as usual, and we've adjusted really well, really quickly. Our clients haven't suffered. Maybe this is an option going forward, especially as, commercial rates have been just heading north the whole time. And in Dublin, there's been a massive scramble for offices over the last 3 or 4 years with a lot of multinationals setting up here. But obviously that's going to happen.
There's definitely a correction coming there, isn't there? Yeah.
Oh, it's huge. Yeah. I mean, thankfully we're not anyway exposed to commercial real estate, but it'd be a terrible time to be in that situation. But I think, people are going to change how they work, change the whole idea of what is an office, because it's not an office anymore. An office is really a state of mind. Tools are there to be physically anywhere to do it. Luckily in most of the Western world, broadband, although we could moan about it in certain areas, is pretty much good enough to fully effectively work from home. And obviously will get better over the next few years. And I think people are keen to take advantage of that. And then I see an interesting post yesterday about someone saying, well, maybe you'll see groups of people that aren't working from the same company, but in similar roles starting to co-locate with each other. So can you imagine software developers across company all working in a software developer co-working space, sharing ideas, sharing latest technology. So those are options.
It's where a lot of open source discussions have been going for a long time, isn't it?
Like a lot,
massive benefits to it.
Yeah, a lot of that stuff that we would have, if we progressively think about it, we wouldn't have made the jump from all work in the office to being in a situation like that. But now we have the middle ground of people working from home. We don't know what the next wave of stuff to change is going to be. This might open up loads of possibilities for changing the way we do things and changing how we think about stuff. And more importantly, changing how large institutions think about stuff. Because if you look at it, 2016, 2017, Yahoo was bringing everyone back to the office. Everyone was coming back in, and we're all going, the only way we can make progress here is everyone sitting beside each other. Fast forward 3 years later, and that's completely changed. Everyone is out the door and working remotely. So the world has changed. It's not going back to normal the way it was before. Will we be better off or worse off from a work perspective? I think people will say we'll be better off because we'll have more options, but we're just going to have to see how the economy does and how it impacts all of us.
And how performance does as well. I mean, I think there's a big difference in working at home with the lack of distraction of today to what it might look like later on. But and I think that will, there'll be an onus and responsibility to ensure that sort of productivity remains as high as I think it has been, because of the lack of, for want of a better expression, for the lack of anything else to do during that sort of period. So some interesting lessons there about doing that, and look, with regards to the when it comes to next challenge, you said, of onboarding people and interviewing people, and through there's some great lessons which I can talk to you about. We've seen companies really adapting and probably making better decisions because of the scenario. So I think it's a really interesting way of actually getting some more focused time on putting that process in place, and with the development of paired programming and testing that can happen around there. It's really interesting of what and where it can go. There's a huge natural human element. There's human cost to all of this sort of thing. There's obviously been significant economic cost that snowball off the back of that. Part of that has been, the VC world pulling down the shutters a little bit. We've seen, more reluctance naturally of investment in there, and with so much of the fintech space that's been, reliant on that sort of investment, there's a question mark about what we see from there moving onwards. I understand that you've probably been self-funded all the way through so far, if I'm not mistaken. Is that right?
Yeah, so we've taken money from Enterprise Ireland, which is the local state investment agency, and some private angel investors. So we've raised about €1 million altogether over the last 5 years, and in various small stages. We haven't taken any institutional or VC money. So in one way, we're lucky we're not on the hamster wheel at this point. We have positive cash flow, we have a strong balance sheet, and we're well positioned. I do worry about companies that have kind of hired ahead of themselves in a bull market, expecting things never to change. Any fixed cost that you put in place that you're going to have to unwind is going to be a bit of a shock to the system. I think we're going to see companies move more towards that client funded growth in the next 3 years. So whereas raising 10 million Series A rounds and just hiring out an org chart ahead of backfilling the revenue and the customers has been all the rage for the last 5 years, and has been encouraged and has been funded by VC investors. That's no longer the case. Like Q2 2020 is going to see an absolute decimation of the VC funding levels that have been happening. So obviously we only caught the end of it in Q1, and some of that has been reported now. But if you think about it, from April 1st onwards, there are going to be very, very few deals closed. So people are going to have to reimagine how they build companies, because the old way of putting a team together, building a product, getting a demo version, getting one client, raising a load of money, and then funding yourself out of that money for the next 4 or 5 years, getting to the next milestone and raising a load more money, it's just not going to be possible in the next couple of years. If you're starting from scratch now, you're not going to get a VC writing a $2 million euro pound check on the back of an idea and a team. So I think we'll see people focus more on the customer, which is going to be great, because the customer will get priority. Stuff that adds value will continue to do well. There's loads of problems still to be solved in fintech, and that's not going to go away. There's still lots of large institutions that need to digitalize their businesses faster now than ever. Remote working has made it possible for teams to do stuff that wasn't possible before. And at a board level, I think we're going to see COVID provide a catalyst to move and accelerate towards fintech solutions. So there's a lot of positives on the opportunity side. On the challenges side, funding options other than VC are going to have to be prioritized. I've always thought that clients were the best source of funding anyone could have, and that's the way we've thought about the business over the last few years. We've been focusing on building out our team on the back of winning deals, getting clients live, and solving problems for them. That forcing function has worked well, because we haven't got distracted by the stuff that doesn't add any value. Once you get onto the VC treadmill, there's a lot of bright lights that can pull you away from solving clients' problems. So we're glad we're not VC funded. We think the next 2 years are going to be extremely challenging if you're relying on that path. Good companies will come through it stronger than ever. If you have a nice to have solution, you're going to probably struggle. Listen, solve the problem for people, get a client on board, get them paying you, and you can build a team on the back of it. You don't need VC funding.
Do you know what? I think that's fascinating, because whenever, and I've been banging this drum for 10 years now, but whenever you look at the wave of startups in the sector, there's a lot of very clever ideas, but very few that actually sort of purchase and really scale. And those that do will generally be the ones who are very customer orientated and solving an actual problem and scaling based off fact as opposed to fiction, which has been so interesting. And I do wonder though about how I think 2021 will be a year where we see some bounce back, and because of how much money's being pumped into the system, you'll see you'll see a lot of money around there, and obviously in those sort of scenarios where you see that sort of thing, the rich get richer in that sort of space.
Yeah.
So I think there'll be an appetite again to invest, and I just hope it doesn't create another bubble of tech investment like 2001 where we see people throwing at money at ideas. I think this is probably given, as you say, a little bit more foresight to people about what can happen, and I think it will be absolutely, as you say, that people will need to look at businesses there that are built to last, built to scale, based off revenue and fact, as opposed to the sort of mythology that's happened around a lot of tech products over the last couple of years.
Yeah, no, definitely agree. Like, that capital hasn't gone away. Like, that capital is still there looking for a return. The way I think about it is, I kind of sum it up as VC groupthink. Once there's a correction in the stock market, it's almost like VC thought process on an elastic band, and they'll shoot way to the left negative. And then as we've seen, the stock market has almost fully rebounded. Like, the Nasdaq is only 10% off its highs. We're still over, VC thought process is still way over here in the dark, hasn't come back to where the stock markets have. So I think you'll see a delayed reaction in the sentiment of the VC investing world, where the next 6 months are going to continue to be doom and gloom. In one way, it is a cause of the fact that their LPs, during this time, kind of battening the hatches, and VC allocation of funds is something that's the first to get stopped, and they then can't or don't want to go back to their LPs looking for cash off them during times like this where they're under pressure. But I think that that sentiment is going to rebound strongly in the next 6 months, and it is kind of self-serving a little bit when you hear VCs talking about valuations are dropping. When you think about it, that means they're investing their money at a lower valuation. So like, sometimes they're the first people to bang the drum of doom and gloom, and we had this Sequoia letter saying the good times are gone kind of thing a few months ago. And a lot of VC companies went on to make their best investments following the last time that happened back in 2008. So I always look for who benefits from these kind of messages. Sometimes the VCs could be serving themselves a little bit, and in one way, when you think about it, it provides a lot of air cover to their portfolio companies to make redundancies and make layoffs. So when they look at it from a point of view, it's almost giving permission to their CEOs and saying, okay, we've kind of pushed you to overextend yourself the last few years. Now we're putting out the message that things have drastically changed. So, feel like you have permission to make those redundancies on the back of that. And,
it's been
that's my skeptical mind at work, Toby, but sometimes I also get optimistic as well.
We'll come on to that in a second, but I think it's been this has been characterized extensively by the sort of period of world-class comms, isn't it? The communications games that have been going on, and PR companies have been earning their corn at this sort of time, haven't they? And communications companies, it's been fascinating to watch.
There's a lot to be read between the lines, for sure.
For definite. Look, let's move on to the upside. Let's move on to the opportunities. Let's move on to opportunism. Let's look at what the future looks like, and how all of this can really benefit. Let's look at talent. Let's look at how this whole situation can be turned from a negative into a positive. Tell us your thoughts there.
Yeah, so I think there's a few trends that will accelerate, that have been slowly, gradually happening anyway, that are going to be positive for fintech. So one of those is cloud adoption. So cloud adoption in the financial services world still feels early to me. When we first launched FundRex 6 years ago and we decided we were going to go onto AWS, it was very much a case of clients saying, we'd love to use the solution, but do you have any on-premise version that we can use? That has slowly evolved to some early adopters. Now, in the last 18 to 24 months, we're getting in RFIs and RFPs where it's a cloud-only solution is what they're looking for. We're seeing large financial institutions transitioning stuff from their internal data centers onto AWS and Azure as a policy. But we're only seeing that happen now in the last 12 months. So that trend is going to accelerate now on the back of the changes with COVID. Companies are looking to digitalize as many of their systems as possible. They're looking to rationalize them. They're looking to centralize them. They're looking to get their data into one location. They're looking to obviously move it from a CapEx to an OpEx given the financial pressure they're going to be under. We're going to see a lot of that happening. And I think that trend of people moving systems to the cloud, moving big pieces of architecture to the cloud as well. And actually what we've seen good examples of in the funds industries, we've seen products being released on the likes of AWS. So Citco released a treasury product last year on AWS, which is fantastic to see. We've had SCI Investments, BNP Paribas on the fund administration side, both launch APIs at the end of 2019. So the industry is continuing to evolve towards digitalization. When I look at the financial services in our specific niche area, which is funds, it always feels like it's lagging tech by, I'd say, somewhere between 3 and 5 years. So we recently seen, you know, casual wear at work happen in our industry in the last 24 months, whereas it's been happening for 10 years in tech. Work from home had started to be more of an option. Obviously now it's a requirement. So we only really need to look what's happening in tech in terms of trends, and you'll see them come to financial services. You know, software as a service, business model is becoming more better understood. Companies are launching it and transitioning from old legacy on-prem models. So opportunities there for those to ride those waves of those changes are abound. I think in terms of talent, a lot of firms that, you know, are just pure unlucky, just in the wrong type of industry, travel, for example, are shedding a lot of very talented people. It's an opportunity for fintech companies to access talent that they wouldn't been able to access previously. So I think that's one positive factor that we need to be aware of. And then, you know, the resilience that fintech has shown and financial services shown in the last 3 or 4 months is going to stand to them. So, like, you know, I was on a webinar last week and I said to someone, who would have thought this time last year that, you know, fund administration was a safer career choice than dentistry? So, you know, these type of things in the new world, you know, are going to play into fintech's hands, and there will be a lot of people available and looking to get involved that we wouldn't be able to access before. At a board level, I think, as we touched on earlier, COVID is going to be a catalyst. So when we look at any of our projects, it always depends on the priority for the company of when things get adopted. All of a sudden, you know, working remotely, automating workflows, getting in robust new technology has jumped up 5 or 6 places on the priority list at a board level. So, you know, when it comes to this September, I'm very optimistic. I think when people start planning for 2021, projects like adopting new fintech solutions is going to be very high in the agenda. Whereas I think if COVID hadn't happened, it would be somewhere around mid-table, where it's still, listen, we've other stuff to do and this sounds nice, but now I think it's more of a case, well, we have to do it now because, you know, COVID has shone a light on any weaknesses we've had, shone a light on what clients are looking for specifically. They want more done at a lower cost, basically. So it's trying to give financial service institutions the ability to do that. That's what we're focused on at FundRex. And I think a lot of fintechs that are in that space will do well.
I think that's a really interesting sort of insight there, isn't it? It's more for less has been the sort of rise of fintech, you know, all the way through. I think digitalization has absolutely hit that agenda. You know, the last 20 years of tech advancement has all been about getting immediate access to things. It's speed, it's cost, it's you know, precision and data fueled through, you know, through most part of it. It's been a massive battle to get that message through to the financial services sector. Yeah. And, you know, the legacy of this has been the adoption of technology and you know, cloud as you talk about, but everything else behind that, it's always lagged. And I think, you know, the fact now that it's moved forward is a really interesting part. And that talent piece is another area as well. You know, there's been a reluctance, I think, quite a lot for people to look outside of a traditional financial background for technologists to have come from. But there is so much talent outside that I think this now sort of spreads the eyes a little bit as well, and the robust nature of finance through this, you know, that got hit through 2008 aggressively, you know, meaning that sort of, you know, maybe financial technology wasn't the place for, you know, for the best talent to go to for, you know, for a little while. I think it's really coming back very strongly on that. So I think it's a very exciting, you know, postscript to all of this.
To kind of expand on that point, I'll give you a stat that I heard in a podcast last night. PayPal, first 264 people at PayPal, only 3 of them came from financial services background.
Is that right? Yeah.
And
Yeah,
then a lot of that team went on and was involved with Square, and they had a similar ratio. About 1% of the first 300 were from financial service background. Two of those are probably two of the biggest impact, fintech firms in the last 10, 15 years, and founded and ran and built by a team of non-financial services people.
I wonder what the stats look like when you switch them against the sort of investment banks and hedge funds and asset managers, where I think it will be a lot less. And you look at the sort of speed of evolution of both, and maybe the talent being the catalyst behind it is it's a very interesting piece to look at. Yeah, it's a new world without question, and within that comes great opportunity. And it's been great to hear your take on all of that. Thanks so much for sharing your thoughts and giving your insight. And look, I hope you get back to that Manhattan apartment in the not too distant future safely with the family. And look, I'm really pleased to hear as well the business has continued to to go from strength to strength. And I think that's been one of the great things about this, is that the show can go on, and the agility that you guys have shown has been really inspirational. So I really appreciate you sharing the journey and some of the lessons, and I hope everyone at home's enjoyed it as much as I have. And thanks for joining us.
Thanks very much, Toby. Thanks for your time.
My absolute pleasure, and we'll speak to you again very, very soon. Thank you all for watching, and we'll see you soon on another episode of Fintech Focus TV. Thanks a lot.